Good morning. Welcome to Stock Market Today for Tuesday, July 28th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email to follow along with this show, as well as get daily stock ideas to consider. That hits your inbox every trading day before the market opens. So U.S. equities finished higher on Monday. Growth and momentum factors outperformed after lagging last week. Technology and materials were the best performing sectors, while utilities and financials lagged. Treasuries were weaker with the curve steepening. The dollar was lower on the major crosses, continuing a trend to the downside. Gold finished up 1.8% at a new all-time high. WTI crude finished up 80 basis points, reversing earlier gains. As we get to the desk this morning, futures are down 20 basis points after Asian equities were mixed overnight. European equities are mostly lower, reversing some earlier strength. Treasuries are unchanged to slightly weaker. The dollar is stronger against the euro, but lagging the yen. Gold is down 50 basis points after trading at that record high yesterday, and WTI crude is off 30 basis points to kick us off on a Tuesday morning where a false breakout is still in play for the S&P 500. Right, that break above 3250, we were there for about 3 days and then pulled back and remained below that breakout level. Down below 3,000 to 3,100 remains support. Should that break, we have to start thinking about 2850 to 2950. Resistance in the 3,300 to 3,400 range. The highs are in play as long as we are above support. Thus far, support has been holding, so no change to that bigger picture view. I think in the near term, there could be some choppy sideways trading. We want to continue to manage risk. We are closer to overbought than to oversold, rounding out of that position now. Chaikin money flow is bullish. Now on that 13-period CCI, that bearish divergence does remain in play. It awaits confirmation. Doesn't have to confirm, but it is in fact in play. So the structure of the S&P 500 chopping near the breakout level at 3250. Can see a case for some near-term continuation of choppiness, potential downside, but there does appear to be solid support down below. Again, in that 3,000 to 3,100 range, you actually have the 50-day moving average slightly above that level. The 200-day moving average is in the zone. So no real change here from a bigger picture trend perspective. The move off of the March 23rd lows very much intact. So from a strategic standpoint, our views that the highs are in play remains in place. Obviously, we don't think we're going to get there in a straight line. So we think that some choppy trading here in the near term could be in order. So that's the structure of the S&P 500. As we kick off trading on a Tuesday morning, now let's touch on our market in a minute. What are we writing about? Well, we moved higher yesterday in advance of fresh stimulus. And after the close, we had reports that Congress passed a new stimulus package. We'll see how the market reacts to that today. I think it was widely expected. Comm services is going to be in focus this week ahead of key earnings reports. We are going to hear from Facebook, Google, and EA on Thursday. Thursday is going to be a huge day for earnings, as we'll also hear from Amazon and Apple. Materials flash a relative breakout. Remember what we've been saying about materials. It's our favorite of the cyclical sectors, and we now have a relative break of resistance to go along with that view. Utilities, could they be finding support at the 2018 lows? It's one of the reasons that I have this near-term choppy view. Strength in the utilities of late. Futures point to a lower open today, as I said. Let's take a look now at the major indices from a power bar perspective. The Dow adds 48 basis points yesterday. 2-to-1, 8-to-4, bulls to bears on the power bar ratio. The S&P 500 up 74 basis points, 154 to 76, bulls to bears there. NASDAQ tacks on 1.8%. Big day for the NASDAQ, which has 41 bulls for only 6 bears. Small caps also outperformed, 591 to 295 there. Bonds down, tick, sending yields slightly higher. Tech, your big outperformer yesterday, or your outperformer yesterday, up about 1.6%. Take a look at that power bar ratio for the technology sector, XLK, 25 bulls to 8 bears in what remains our favorite sector on a relative basis. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major indexes across the board remain mixed. Let's hit our stock of the day now. With market kind of potentially being in for some near-term choppiness, remember the power gauge rating for both SPY and IWM are neutral this week. We wanted to look for maybe some potential opportunities on the bearish side of the coin. And Sysco Corporation, not Sysco Systems, but Sysco Corporation, SYY, jumps out at me here as it has a very bearish Chaikin power gauge rating and a weak trend below the declining long-term trend line. Now, the food staples and retailing industry group is strong, but I see a potential setup here for a bearish trade. With Sysco lagging as it has been since the start of the year, while money flow has been persistently bearish during that time frame. The overbought, oversold indicator beginning to roll over in an overbought condition, and we triggered a sell signal here today at Chaikin Analytics. Our reversal sell signal was triggered in Sysco. So, markets have had a good run. For those of you looking at both sides of the ledger, both the bearish side and the bullish side, I think there's a setup here in the bearish side with Sysco SYY for a potential resumption of its downtrend. Take a look at that name. Maybe the options market is setting up to gain some bearish exposure there. Sysco is a call out in our note today for Chaikin Analytics clients, and we're bringing it to you here as a potential idea. Our sector tracker now. Movement of the major sectors over the last 5 days. Counter trend rally in energy. If we look at the kind of bigger picture relative trend in energy, it's still very much bearish, as I highlight in my note today. It's Tuesday, so we go over sector relative performance. There's materials. You've heard me talk about it. Staples showing some signs of life as well, right? So we have this kind of can't break through 3250. Utilities, which we'll look at later on in the show, finding some support. Staples, a little near-term support as well, and REITs at the top of the list. So you have a little bit of a defensive feel there with 2 out of the top 4 names. Industrials, financials, and discretionary are middle of the road. Utilities and healthcare are higher, but towards the bottom of the list. Comms and tech as part of that rotation trade towards the bottom of the list. We do expect information technology to reassert its leadership characteristics. For those of you who read my market survival guide, which comes out on Tuesday, we touch on why we think growth is getting ready to reassert its leadership relative to value. Our industry in focus, transportation services, which over the past 6 months has been a laggard, lagging the S&P 500 by 13.07%. However, the power bar ratio has shifted positive slightly here with 11 bulls to 10 bears. It's currently ranked number 16 of 21 subsectors. It's moved down 3 slots over the past week. So some names there that might be interesting to take a look at: ArcBest, ARCB, FedEx, FDX, and Martin Transportation, MRTN, all have very bullish Chaikin power gauge ratings. ArcBest has showed up as a couple of screens for me of late. Kind of an interesting looking name there that warrants more work. As we take a look at the fund itself, it's a little bit of a mixed bag here. So you have a neutral power gauge rating. We have that 11 to 10 ratio. The trend is strong as the fund is above that slightly rising long-term trend line. Now, money flow has turned bearish, and the overbought, oversold indicator is rounding out of an overbought condition. You can see the underperformance there when we look at it relative to the SPY. So really a mixed bag here. I think you need to be selective if you're going to go fishing in the transportation group for ideas. Like I said, take a look at a name like ArcBest, ARCB, as that one appears to be in a halfway decent setup. I don't think you have to force it here with the S&P 500 struggling at resistance, but it is an interesting name. I always advocate for building watch lists, and I think that one warrants a spot on your watch list. Take a look now at yesterday's movers and shakers, our gainers and losers in the S&P 500. Large cap biotech had a good name yesterday, had a good day yesterday. Alexion goes along for the ride, up 5.25%. Builders and stocks levered to the housing market had a solid day yesterday Weyerhaeuser in that group up 5.25%. BIIB caught an upgrade. Actually was upgraded 2 notches by one of the big banks, up 5% yesterday. Whirlpool, again, levered to the housing market. WHR with a very bullish rating, up 4.92%. And CLAC, KLA, KLAC, KLA has a neutral rating. Semis had a solid day yesterday. CLAC goes up 4.7%. Loser side of the board, Hasbro's earnings announcement takes 7% plus out of that stock. Carnival and Norwegian down with a mix to slightly weaker tape for the leisure names, down 7% and just under 7% respectively. Cabot Oil and Gas, no real news there, to take 5.5% out of that stock. And AEP, I was reading what drove that one down yesterday, and there's a report. They are reported to be an undisclosed energy company that's mentioned in an affidavit filed in an FBI case. Reported to be the undisclosed company. No real clarity on that, but it was enough to take the stock down close to 5.5% in an up tape yesterday. So let's dive in now. Touching on the trends from a relative perspective. As I said, it's going to be a big week for comm services, right? So we have earnings from Google, Facebook, EA, big names in this group. In addition, we have a lot of the big kind of tech and consumer-facing tech names appearing in Washington this week as well. So with that as the setup, XLC continues to consolidate above support as delineated at a breakout level above the 200-day moving average. You can see this support zone that is held on pullbacks, still very much choppy trading here in the near term for XLC, but it is a big week. It's going to has the potential to set the direction for the group going forward, especially after Thursday's monster day of earnings reports. Now, if we look at the RSI of the ratio, it's kind of chopping around in the middle of the range, which lines up with this consolidation that you're seeing in the ratio itself. Not becoming overbought, not becoming oversold in the near term. So no real tell from momentum. So this one is going to be really very much a case of we're going to have to see what these companies have to say on Thursday night after the close. But thus far, holding support, still remains part of the groups of the growth versus value trade. So we'll get some interesting data points this week on the health of the trend for comms, the health of the trend for growth versus value, as we'll get those big earnings reports later in the week. Now, materials flash a relative breakout. We've been talking about materials for a while now. For the past few weeks, we've been saying that of all the cyclical sectors, we like materials the most. Bullish rating at Chaikin Analytics on an absolute basis, XLB at or near a 52-week high. And if we look relative to SPY, XLB relative to SPY, you can see that progression higher that has kind of gotten us to the point that we like it the most out of the cyclical groups, right? Off the lows here, series of higher highs and higher lows. That's a definition of an uptrend in the near term. Takes out the 200-day moving average, takes out resistance at what was former support, and continues to move higher. All the while seeing confirmation from RSI, which has also put in a series of higher lows and appears to be shifting to a bullish regime. So if we're kind of thinking about positioning and where to look for ideas, I do think materials, one of the areas of the market where we want to look for bullish ideas or potentially bullish ideas if we're building a watch list. So continue to focus on materials here in the near term following this break topside through a resistance. And then finally, take a look at the utilities here. XLU, I'm not going to argue that this is a great chart because it's not by any stretch of the imagination. The ratio is below a declining 200-day moving average. But what's interesting here is we've gotten down to the levels that were at or near the lows in 2018 and seen some stabilization as we get a series of higher lows for the RSI. So strength in materials could lead to some choppiness for the broader tape going forward here. That'll wrap us for today. Take us for a test drive, chaikinanalytics.com/test drive. I'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.